We live in a fantasy world now. Reality has been destroyed.
This is the time that we really need to pay attention.
The probabilities are overwhelmingly on gold's side.
That is the best environment to see gold increase its value.
There's a place where the gold runs deep. And when you strike big. Meet Nevada's fastest growing mineral claim holder in the heart of elephant country. Visit nevadaking.ca to follow the story.
Welcome to Palisades Gold Radio. I'm your host, Tom Bodrovics. Joining me today is Chris Temple from the National Investor. He's the editor and publisher of the newsletter and the website. How are you today, Chris?
Well, doing good. A little chilly down here in Florida, though. We finally, all in one fell swoop, got the kind of temperatures we're supposed to get in North Florida in December. So I don't have my Florida kind of fancy beach shirt on. I got my northern moose-covered flannel shirt on today. Well,
being from Canada, I don't think you have much to complain about down there. There's probably no snow, so don't worry about it.
that we're not going to see.
Chris, I'd like to start by talking a little bit about something that you've been writing about recently, and that's the Biden, Yellen, Kerry new policies on carbon taxes looking forward here. So tell us a bit more about your thinking around this, please.
Well, I'll tell you, like I try and do with everything, Tom, I try and get out from under the partisan stuff, people with their dogmatic philosophies one way or the other. And of course, down here, we just had an extremely polarized election, which technically isn't over yet. There's still lawsuits being filed. I don't think they're going to go anywhere personally, but I can't guarantee you that they won't. So we'll see what happens, but the clock is ticking there. So if you listen to the campaign and just took everything at face value, especially from President Trump, if Joe Biden was elected, it was going to doom our economy, doom our stock market. Of course, the stock market has gone up a lot since the election, so that doesn't make him look very good there. And fracking would be outlawed on January 21st, right after Biden is sworn in on January 20th. Well, that's not going to happen. And anybody that understands these things and politics knows it's not going to happen. Both candidates lie and try and scare you and tell you all kinds of nonsense and blow smoke up your dress and all the rest of this kind of stuff to get you to vote for them. But here's the fact, and I was even saying this weeks before the election, on two major subjects, I think people are going to be wrong-footed when it comes to what we're actually going to get out of a Biden administration. Number one, on China, where Joe Biden will be every bit the China hawk, as Trump said he was, but much better organized in the way he goes about it. And number two, as far as the energy policy coming out of the Biden administration is concerned, I think a lot of people are going to be surprised. Investors who can see this ahead of time, pleasantly so, if they get in the right places ahead of time. And those who are the true advocates of the Green New Deal and all they want is a windmill and a solar farm in every yard, they're going to hate this. They're absolutely going to hate it. And in fact, I've got a bet with two friends of mine who are both Democrats and both think I'm full of more crap than a Christmas goose. But I've said to both of them that don't be shocked if President Biden and his administration keeps Dan Brouillette, who is the head of the Department of Energy. Because about 85 to 90% of what the Department of Energy down here is doing, Biden and his team will be co-opting it. And we know that, especially in the nuclear energy area, and uranium, of course, has had a big move in recent days, a lot of news down here on that. John Kerry, who of course was himself a former presidential candidate, former senator, former Secretary of State, helped to author the Paris Climate Accord, which the Biden administration will get the U.S. back into. He is a very vocal advocate of nuclear energy. Janet Yellen, another retread, who was Fed chairwoman and will now be the Treasury Secretary. She was chosen for two reasons. Number one, because she's a Keynesian. And if you think we've seen in the recent past a whole lot of borrow and spend to try and goose the economy and keep everything afloat, you ain't seen nothing yet. And secondly, she is a founding member, and look this up, folks. This is a shocker. She's a founding member of what's called the Climate Leadership Council. The Climate Leadership Council has gelled fairly recently because all of these people, and this is going to be the Biden administration's signature policy, biggest thing it does going forward. They are putting the pieces together to take off the shelf a game plan that has been there for the better part of 30 years, that is a whole system of carbon taxes and credits and what are euphemistically called dividends. There's going to be a lot of investment involved in this. Wall Street is going to have an entirely new play toy out of all of this to securitize and slice and dice. And eventually they will do with this whole carbon scheme what they did years ago with mortgages and with real estate. They'll blow too big a bubble and it'll collapse. But that's years down the road, Tom. And between here and there, if you're in the right areas of green energy, the companies that will help to reduce carbon emissions all across the board, you're going to make a lot of money as an investor.
So, Chris, as you're talking about how these policies might change how we look at energy and carbon, where are some of the best places that investors could position themselves to take advantage of this?
Well, number one at the top of my list is uranium and the nuclear energy space. A lot of people are waking up quickly to that. And in fact, I don't know if you've seen it yet, but I had my cartoonist quick do a cartoon for me yesterday. In fact, it's now on my Twitter page. But I've made the characterization before talking about the gold space, which generalist investors are not gold bugs, and that's 99% of investors out there. But from time to time, some of them start to warm up toward gold. And when they do, it's like a 300-pound man jumping off a diving board into a kiddie-sized wading pool. But that's nothing compared to what's going to happen to uranium, because there's a tiny universe of stocks to invest in the uranium space compared to gold, where there's still too darn many companies out there, in my opinion. And so forget about the 300-pound man jumping into a kiddie-sized wading pool. This is like an elephant jumping off a diving board into a kiddie-sized wading pool. And some of these uranium stocks have started to rip a little bit in the last several trading days. That's just a small taste of what's to come. So that's at the top of the list. John Kerry, as I mentioned a minute ago, has been a vocal proponent of nuclear energy all around the world. A lot of people are waking up to the fact that solar and wind power they actually have a bigger footprint on the environment for what you get out of them than what nuclear energy does. And one of the things I'll tell you that astounded even me last week when the U.S. Senate committee that oversees some of these things passed a bill out of committee on some of these subjects, they're even going to go so far as to countermand what a couple states have done in ordering older nuclear power plants to shut down. They want to keep them back open, whatever is necessary. So that's going to be a huge area to be in. Of course, you got the whole electrification thing, the global battery arms race, as I've heard people call it, which up until now, the U.S. has been almost AWOL on. So you're going to have lithium, cobalt, all the usual suspects among the battery metals. Hydrogen is something a lot of people think has got even more play longer term and is more sustainable, because let's face it, even to go the battery vehicle route, you're talking about a lot of mining going on in the world. So we'll see how all this plays out. And it's going to be particularly curious for me to see how a lot of environmentalists and some of these Green New Dealers are going to respond when here in the U.S. We see a NorthMet project in the Arrowhead of Minnesota, which has been fighting a gauntlet of 20 plus years of environmentalists fighting it. Well, let's not be hypocrites. Let's not condemn people, little children in the Congo and other third world countries to dealing with toxic substances and so forth to give us our cobalt and everything for our cell phones and batteries. Let's see if we're going to be really serious, and if Biden is going to be serious. And I believe he will be to a great extent, to carry forward what President Trump has pushed, and that is that we need to be more dependent on ourselves and not on imported metals. We're going to be doing a lot with Canada. You're going to have entire corridors from the whole food chain of battery-powered vehicles, electric vehicles, from getting the lithium and cobalt and other things out of the ground to the manufacture. It's going to be more and more within our own four walls here. In some contexts, the U.S., some contexts, all of North America. So a lot of great stuff in these themes.
So, Chris, in your opinion, does that mean if we're going to be more dependent on our own energy and reserves for these metals, do you think that that's going to open up some mining legislation to make it easier for these companies to actually get projects to be into production?
Well, it should, and we'll see what happens. This is where you've got to have a little bit of caution. I don't want to say it's a completely rosy picture, because President Biden is going to have razor thin majority in the House of his own party that will be on his side somewhat. And even if the Senate goes 50-50, if both of these seats that are coming up in runoff elections on the 5th of January, if they both go to the Democrats, you had a 50-50 tie, you're not going to see a very liberal Senate as a result of that, because there's a number of the blue dog Democrats and the more moderate ones who will not go along. Some of them already said so. Most of all, Joe Manchin from West Virginia, that all of these pet ideas that the far left of the Democrat Party has, they're non-starters with him. So we'll see. One of the good things the Trump administration has done is to streamline a lot of these regulations. You shouldn't have to go through the same exercise 5 times, which eats up time and money, if you can get the job done in 1 or 2 times. So that's an oversimplification, but that's one of the things that President Trump has tried to do. To get things to where they're easier to permit. You still got to meet all the same standards, but under previous administrations, and Obama's in particular, there was this quest, it seemed, to regulate things and bloat the bureaucracy even more, just for the sake of doing that, because the philosophy is they know what's best for all the rest of us. So in that respect, President Trump has done a good job in getting rid of a lot of that. I hope President Biden continues with that, because we do need a lot of these things in this country. And look, even though he tried at times to come across as, warming up to the liberals and progressives in his party, the guy would come out tomorrow and identify as a hamster if he was told to do that by the people who have carried him for 47 years. I had a friendly argument with my former father-in-law the other night, who thinks Trump had the election stolen and all this stuff. And well, what's Joe Biden anyway? He said he hasn't done anything in 47 years. That's exactly why he's president. All right. Kamala Harris is vice president, who Democrat primary voters wanted nothing to do with during the primaries. She's vice president for exactly the same reason. They both are 110% establishment. They both will be China hawks, because that's what the game plan is now for the intelligence services and the military here in the U.S. They are our new Cold War enemy, and they will both carry forward with a lot of what President Trump started with as far as critical mineral security, sourcing more things within our own country and our own continent, et cetera.
Excellent, Chris. So let's move on to gold. We've recently seen it bottom out at around 1760, and we've seen it bounce back here. You were talking about the fact that it's probably hit a bottom here. So tell us a little bit about what we've seen out of the market, and also some of the lesser known factors that are going to be working as a tailwind for it, pushing it higher into the next 6 months here.
Well, let me say a couple things first. Back when I told people to get out of our trading positions when gold was at its peak around the 1st of August, I felt that the important chart level to watch, what I thought at the time was a worst case scenario, and I still hope it is, was the 1750 to 1775 area. So we've bounced successfully off of that. Importantly, we also went above 1850 on the spot price, which had been some support on the way down. If we can especially close this week above 1850, then that really increases the odds that we did see the low now for this gold correction. But I have to inject something here. A lot of people who are fighting the last war, which is why my special report was entitled, This Is Not Your Father's Gold Market, which is on my website, among other things, is that when Biden won, apparently, when he was called the winner, at least by the media, and then even afterwards, when he nominated Janet Yellen as his Treasury Secretary designee, did gold go up or down? It went down. And that's because generalist investors understand the truth of what I like to say once in a while when gold bugs get too smug. And that is, Tom, that maybe in heaven the streets are paved with gold, but here on earth we use asphalt. We use a lot of different things down here besides gold. And the reason why you saw gold sell off and everything else go up is because generalist investors, and whether you agree with this or not, doesn't matter. It's the reality of the markets. Generalist investors look at the landscape of having a Keynesian like Janet Yellen, having a Yellen, Kerry, and Biden team that's going to, you're talking trillions of dollars of stuff that's coming in green energy specifically and infrastructure spending as well. And when you look at that, no generalist investor or money manager in their right mind is going to first go to gold. They're going to look at uranium. They're going to say maybe oil has finally bottomed. If we're also going to be, looking at this global pandemic in the rearview mirror before too many months go by. They're going to want copper, which has had a big run and contrary to what I expected, has had a fairly significant technical breakout recently. You did see the dollar go down, but it didn't help gold because of all of these reasons, because people are looking at what the likely policies are going to be to come out. And it'd be kind of like the time frame, as I was discussing with you before we recorded, you go back to 2002 to 2007 or 8 time frame when it was a rising tide lifted all boats. You had a weak dollar, but you also had China, which had a voracious appetite for everything with its big boom back in those years. And gold did well during those times, but not as well as a lot of other things did. And so if we're lucky, that is the environment that we're going to have going into the future, the next several years. And generally, I think that is what we're going to see. Near term, I think if gold has a major rise, it will be because something has come out of left field to scare the markets again, whatever that might be, because things are very, very stretched right now. The stock market has no business having this rally that it's had recently. In my opinion, a lot of these base metals, though they're great long-term, are ahead of themselves. I'd be a whole lot happier with some other companies I want to be adding on top of ones I have in recent weeks if I saw them all pull back 20 or 30% first. So we'll see. But I can very easily, and my gut just tells me there's too big a chance for this right now because everybody's on the other side of the boat. If you have a big rip and we had a near-term quick sprint for gold back to those early August highs, it'll be at the same time the U.S. dollar screams higher again and has a short covering rally. It'll be as treasuries rally, which I'm really close to telling people to trade into them again. And it'll be as everything else corrects 20 or 30%. So we'll see. Long-term, no question. However you want to describe it, whether it's borrow and spend, tax and spend, the Fed keeps printing money. They'll pull more tricks out of every bodily orifice on top of what they've already done this year. You can't not like gold going forward. It's only a question in my mind of where it ranks with everything else, depending on how the macro situation evolves.
Absolutely, Chris. So one of the things that you and I, again, were discussing before the call here was your view on the difference between gold manipulation and gold suppression. So give us some of your thoughts around that, please.
I regularly annoy people with those thoughts. There's a school of thought that says when gold doesn't do what gold bug gurus say it's supposed to do, it's because the price is manipulated. Okay. People can read my report on the website on the gold sector that I updated back in the summer. They can look at all the other stuff I've done. And Tom, this is not rocket science. It's not easy. It's not hard to figure this out. And I have said many a time that when continually you have someone that must always resort to, well, I'm wrong, but it's not because I'm wrong. It's because the gold price is manipulated. You don't want to be taking advice from people like that. First of all, gold is manipulated. Silver is manipulated. Everybody knows that JP Morgan just got hit with a hefty fine for spoofing those markets as well as the treasury market. There's not an asset class that is not manipulated in one form or another. And by that, Tom, I mean that you have traders who will spoof, they'll put phony trades in, they'll take certain times a day when you've got low liquidity and run the price higher or lower than it might have gone otherwise without that intervention, just so they can scalp a little profit here and a little profit there. Happens all the time. I distinguish that from price suppression, which I don't see evidence of in gold. I have in one time in my life, and these stories are also on my website, some of the best, coolest history of gold you can read, going back 20 years almost as gold was bottoming, and out of nowhere, gold, which bounced, reliably within a range of 20 or 30 or $40, because for most of the 80s and 90s, forget about manipulation, forget about suppression, the gold price was managed for a good chunk of 20 years or so. I mentioned to you earlier that the Financial Times, and I still have this in my files, years ago, had a 3-page story naming names, naming Peter Monk, who used to run Barrick, naming Barrick Gold, naming Brian Mulrooney, naming George Bush Sr., naming Republic Bank of New York, and the others who for a long stretch of time treated the gold market as their personal play toy. And they couldn't control every single minute of every single day, but in a broad sense, Tom, they did control the gold price for a lot of years, kind of like the beers for years controlled the price of diamonds. And again, not always perfectly. There was one infamous incident back in the mid 80s, if I recall, that Russia decided they didn't want to play, and they dumped a bunch of diamonds on the market, pulled the rug out from under De Beers for a while before they, were able to regroup and regain control of things. But you had that for a long time with gold. And what caused a major incident of price suppression for gold was when everybody had, people knew when to zig, people knew when to zag. And you may or may not remember this personally, but people my age or older that have followed gold for a long time always knew that Barrick was the company that gold bugs loved to hate, because they had this hedge book where they were playing the gold price like a violin, and nobody else knew to do this. Nobody else had the power to do it. But instead of zagging or zigging, people did the opposite in the late summer of 1999. And out of nowhere, when you had the first major change come about that took us to the more market price that we have had for gold in the ensuing 20 years, you had what was called the Central Bank Gold Agreement that was agreed to on the sidelines of the World Bank meeting in New York City in September of 1999. The whole story is on my website. And with nobody being prepared for this, and with a lot of the usual suspects being short, the gold price all of a sudden went from $260 up to $340 and was threatening to go higher. And it took the New York Fed acting through Republic Bank of New York to slam it back down. I've got a lot of interesting details about exactly how and when this was done. And finally, when they got the price back down to that level where it meandered for another couple of years, everybody was in the right place. 2001 was the final bottom. 2 or 3 times it hit this of 260 an ounce or so. And then gold started taking off, and it got up to $340, and it kept going a lot. And you know who its biggest cheerleader was? Alan Greenspan, because at that particular moment, he had to convince the world that he had licked deflation, that the stock market crash of 2000 and the terrorist attacks of 2001 were not going to throw us into a Japan-like situation. And he says, look, folks, gold is going up. The market agrees with me. Same guy that had to knock it down when everybody was offside and suppress the price, which he indeed did do a couple of years previously. So that was, if anybody else can show me suppression, this scheme, you be my guest. But when you go back to 1971, when gold's official status as a reserve asset was ended by President Nixon, gold has gone up in percentage terms more than stocks, more than real estate, more than just about anything. That's a pretty piss poor job of price suppression.
So, Chris, is there any way, in your opinion, that this is going to, any way that this is going to break, or what is going to take gold to actually really make some substantial moves here?
Well, again, in answering that, Tom, and I alluded to this a few minutes ago, you've got to look at the market the way that non-gold bug investors do, because they control 99% plus of the investment capital out there. Everybody got excited when it was announced after their second quarter results that Warren Buffett, who thought of gold as something that was kind of stupid because you pay a lot of money to dig a hole in the ground over here, spend a lot of money to take it out and bury it over here. Who would want to do that? And all of a sudden, Warren Buffett had taken a position in Barrick in the second quarter. And I warned people, be careful. You got to see some follow through this. Well, what did we just find out 10 or so days ago? He sold some of what he bought already. So, and that's what people follow. Again, you don't have to like this. You don't have to agree with it, but you need to understand the thought process of the 99% of investors out there who are not automatically religious gold bugs. From time to time, they wrap their head around something and say, okay, maybe we do need to listen to the guys wearing the tinfoil hats and put some money into gold. We had it in spades after the 2008 financial crisis when gold bottomed at around $670 an ounce, and it went to darn near $2,000 within 3 years. That wasn't gold bugs put money into gold. It was non-gold bugs. It was generalist investors who saw all of this money printing coming out of the wake of the financial crisis and said, gee, maybe some of these guys are right. We're going to have runaway inflation. But it didn't happen the way that was advertised. What happened was everything else started reflating. Mm-hmm. So after a while, these generalist investors who, look, especially the professional ones out there, Tom, if they right now and themselves are getting into gold to the exclusion of so many other things that are going to do good with this, carbon scheme coming and all of the infrastructure spending coming and stuff like that. And some of these money managers tell their boss, yeah, but I really believe the gold bugs. I think gold's going to go nuts because they're going to debauch the dollar and print all this money. All right, fine. Well, you tell that to your drivers, your passengers when you start driving an Uber tomorrow because you're fired. So the pros look at it that way. Others look at it that way. Frankly, as I said a few minutes ago, if gold has a big move in the near term, it's going to be as a risk-off asset again. Later, if things really start rolling, and we will see inflation bubble up down the road, again, not like people think, but it will. We'll see gold get some traction, but it's going to be part of the pack. It's not going to lead the pack necessarily. It'll be part of the pack with everything else melting up in price. And look, I'm still very bullish long-term on gold. It's just not necessarily my number one thing I'm bullish on right now. Again, assuming that the central banks and the powers that be can keep everything together.
Absolutely, Chris. Something I'd like to get a little bit more clarification on from you. We kind of discussed this a little bit before the call, but you were telling me that you think that the sentiment might change to risk off from general equities. So what would happen in that case to treasuries, the dollar, and gold for? I
think they would all go up in tandem. There was a long time there where I used to call treasuries and gold the odd couple because they weren't supposed to be doing the same thing, but they did. Treasury prices went up and yields came down at the same time gold went up. We didn't used to have a world like that. They would almost always act inversely to each other, just like the US dollar and gold once upon a time acted inversely to one another. But those rules have all long since changed. If you go back, for example, to the European crisis about a decade ago, and it looked like a couple countries were either going to leave or get kicked out of the whole Euro scheme. And that's something that's looming right now too, by the way, this whole Brexit thing and what Europe has to do even beyond that. You saw gold go up significantly. You saw the dollar go up at the same time. You saw US Treasury bond prices rise and yields fall. And I think that we could, any day, we could see that same kind of thing happen again. I'm not short anything right at the moment, as much as my gut tells me to do it. My head tells me don't be an idiot because it hasn't worked real well this year. But look, that can happen. And especially with the US dollar, which is just absurdly oversold technically. And I don't care what it is or what your philosophy is. When you see every trader saying exactly the same thing and doing all the same thing, and they're all on the same side of the boat, who's left to do it? So the question is, what's going to happen that would trigger this? Do we have, are we going to see people get sick from these vaccines they're going to start jabbing people with? And all of a sudden say, oh, gee, maybe this isn't the cure all we thought it was going to be. Are people going to realize that there has been so much damage done economically that all of these rosy scenarios that people have, and fueled by all this Fed easy money and liquidity that makes everybody feel bulletproof with their rosy prognostications for 2021. I mean, right now, with as much as earnings estimates have been raised considerably for next year, you're still at 22 times next year's earnings for the S&P 500, when the typical norm is 16, give or take a little bit. So the market's very overpriced, and especially if anything happens that's going to throw a major monkey wrench into this Pollyanna-ish attitude that people have. So what I think you would simply see, Tom, is that keep in mind that the rallies in oil, crude oil has utterly no business rallying as much as it has recently, in my opinion, but it's been because of the weak dollar. You've got everybody playing this carry trade. So if a new fright comes into investors, you're simply going to see reversals of all this stuff. People will cover their shorts on dollars, and to do that, they're going to have to sell stuff they're long on.
Perfect, Chris. As we wrap up here, is there anything else you'd like to touch on?
Not necessarily. My mantra, as you know, is to not be dogmatic, to not be opinionated. I call things as I see them. During the recent election season, I was an equal opportunity pisser-offer for people that have Trump derangement syndrome. They didn't like me. And some of my friends and even relatives who are Trump sycophants, who thinks that he is a second coming of Jesus and George Washington rolled into one, they aren't too happy with my opinion of him either. Trump has done some good things as president. I alluded to some of them earlier. His intellectual capacity, sadly, is not sufficient that he took proper credit for that when he was running for office. Because again, you look at what his Department of Energy has done in numerous areas to make up for a lot of lost years where we surrendered what used to be our single-handed and unchallenged leadership on nuclear energy and technology. We surrendered that. Now we got to play catch up. We let China get off to a huge head start on electric vehicles and battery technologies. This year, China has opened about 40 new facilities for batteries. The U.S. has opened 2. If we had kept things as they were before, it probably would have been 0. So we got a lot of catching up to do. He laid the foundation for that. But again, I look at things just as they are. I understand that more than Democrats and Republicans, you've got a power structure that runs the U.S. that's the same one that has been around for generations. Doesn't matter who's in power. The agenda is set by other people in a big sense, which is why I've said, and some people still don't believe me, even though the news is vindicating me almost every day, that China will be a much there was some talk that China wanted Biden to win because you get Biden in there, he turns right around and sells us out to him again. Nothing could be farther from the truth. You're going to see a hawkish Biden administration in most respects, and you're going to see a lot of good energy stuff, as I said, going forward. And I've already got people positioned in some of these stuff, and again, I'm hoping with some others that I didn't act on quickly enough, we get a pullback and I can recommend more.
Perfect. All right, Chris. Well, that's I think that's a perfect place to wrap up here. We can find more from you on Twitter at NatInvestor and also nationalinvestor.com. Anywhere else?
No, that'll do it.
Perfect. Thanks very much for your time today, Chris.
My pleasure. Always good to be with you, Tom.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.